And it's 1:30 p.m. right here in Lagos, Nigeria. Coming up on the program, the Kenyan shilling sank to a new all-time low, $150 to the dollar to kick off the week. And Dubai set to operate Tanzania's largest port berth for 30 years. Plus, trade among East African community partners has taken a dive since the implementation of a 35% tax on imports. Hello, welcome to the program. I'm Ladi Williams. First off, let's kick off now with the markets starting on the African continent. We see the NGX kicking off at intraday in the red, 0.03%. Marginal decrease right there. We see South Africa's GSC also down 0.38%. Other markets we track, we're seeing North Africa, the EGX 30 there, still driving on in positive territory, like we saw last week, up 1.18%. We're seeing investors there piling into that market due to an expectation of a currency devaluation right there in Egypt. And we see Kenya closing on Friday down by 0.02%. Let's take it over to the Middle East now. We see Middle Eastern markets mostly negative. Just the Qatari index, the lone gainer at intraday. We see in UAE, Abu Dhabi index down 0.31%. Same with the Dubai index, they're down 0.36%. Other markets we track in the Middle East also down. Saudi Arabia, bigger drop there, 1.19%, while the Qatari index there managed to stay marginally up there, 0.02%. Let's take it on to London now. See, it looks like it's more job cuts loading in the UK. Joining me now is Juliana. We'll try and get Juliana for that later on. Let's take a look at what's happening in Europe first. Now, turn to Switzerland, where the right-wing People's Party has scored its best results ever in national elections, reaping the rewards of a campaign that focused on immigration and energy security. For more now, joining me, let's take a look at how this will affect the economy there. We have Cassandra Sunt from DW Berlin. Great to have you, Cassandra. So tell us more about the Swiss People's Party and what about their message was appealing to voters.
Thanks for having me, Lottie. Right. So exit polls show that the right-wing party is on track to win 29% of the national ballot. That's an increase of nearly 3.5% compared to the last election, which was in 2019. The Social Democrats party gained around 1%, and the Greens took a big hit, losing 4 points to fall under 10%. So on the one hand, the Swiss People's Party has been the most popular in the country for the last 2 decades. But this surge of nearly 3.5% shows some underlying concerns among Swiss voters. Mostly what seemed to be at the top of mind was energy security, including the costs associated with the switch to sustainable energy. And the SVP, as the party is known by its German acronym, would also point to concerns over immigration as a key to its success. Switzerland is, after all, a small country with about 8.7 million people, and the Swiss People's Party has promised to limit the country's population to 10 million, citing an overstretched infrastructure and lack of housing.
The Swiss economy has been on slightly shaky footing. What financial insecurities were top of mind?
Well, one of the things that Switzerland is most famous for is banking. And this year saw a major bank in that country, Credit Suisse, fall. I know that the news moves fast and that there have been a lot of major events this year, but it has only been 6 months since the bank collapsed, threatening to take more major financial institutions across Europe down with it. It was eventually bought out by another Swiss bank in a deal brokered by Swiss authorities, but that was a reputational hit to the country. Other issues so far, or that seem to affect the election, include inflation, but it's been much less significant than elsewhere in Europe. Recent readings have inflation back under 2% there. And Switzerland has also seen rising healthcare costs recently, which some analysts are saying did help the second largest party in the country, the Social Democrats, who saw a slight uptick in votes and may gain a seat in the parliament as a result.
All right, turning to markets now, what would investors be looking out for today?
markets have moved in slightly different directions at the start of trading today. Investors are keeping a close eye on developments in the Israel-Hamas conflict. London's benchmark FTSE 100 index slid 0.2%. The Frankfurt DAX index rose 0.2%, and the Paris CAC 40 edged up less than 0.1%. Among the major movers for the day so far, Philips climbed a point. That Dutch health tech company raised its full-year outlook. Drug maker Invidior jumped 6% after it agreed to pay $385 million to settle a lawsuit. And coming up this week, investors will be monitoring earnings from major U.S. tech firms like Microsoft and Alphabet, and an interest rate decision from the European Bank will also be in focus.
All right, so much for investors to look out for this week. Thank you so much. That's Cassandra Sund right there, giving us the details from Europe. Let's take it to Asia now. See, Asia-Pacific markets continue their sell-off ahead of a week of inflation readings from across the region and South Korea's third quarter GDP numbers. Looking out for that, Australia will release inflation figures for September. That's on Wednesday, while Japan will release Tokyo's inflation numbers on Friday. So it's all about inflation data this week. And we see the color behind me there. It's red, with the Nikkei 225 down 0.83% to close. Elsewhere, we see the Kospi down 0.76%, HSI index down 0.72%. Other markets we track right there in Asia, the Shanghai Composite, big 1.47% drop, while the S&P ASX 200 also down by 0.82%. Let's take it on to the U.S. now. See, stock futures fell today as Treasury yields rose, and traders looking ahead to the release of corporate earnings from tech industry giants. We're definitely going to see the NASDAQ impacted by whatever comes out there. Futures started with Dow Jones and Johnson average jumped to 143 points, down 0.55%, same as the S&P 500 futures. To the tech-heavy NASDAQs, down bigger, 0.65%, talking about the futures at 14,568 points. The benchmark 10-year Treasury note yield climbed about 9 basis points to break back above the key 5% level. The yield on the 2-year note and the 30-year bond also rose. So we'll see how sentiment is looking in the U.S. That's more like risk-off right now. Oh, the Deputy Assistant Secretary of State and the Bureau of African Affairs, Joy Basu, is challenging stakeholders in the tech ecosystem to explore the possibilities inherent within their control and to prefer solutions to Nigeria's economic challenges. Ms. Basu met them in Lagos, says she's captivated by the level of energy and raw talent she has observed in her interactions right here in Nigeria. Take a listen.
It's a meeting with tech venture capitalists, startup founders, and ecosystem supporters with the representatives of United States government, led by the Deputy Assistant Secretary of State in the Bureau of African Affairs, Joy Basu. Ms. Basu is visiting Nigeria with the information that the United States does not have all the solutions for Nigeria, but following tested path to success could help.
Look for partnerships with American companies, whether that's directly in jobs, whether that's selling your product to them. And that, again, building on that incredible people-to-people U.S.-Nigeria bond that is there. Yes, I want the government to be a great enabler of that. And you, as young Nigerians, nothing will stand in your way. And so form those connections, right? The last thing I'll say is that is what I found was the common thread as an investor to now being a diplomat is it's in these spaces, having these conversations. It's about solving problems together in partnership, and that is what comes from being an investor to also being a diplomat. And so do that directly with the products you sell, the goods you're producing, with your fellow entrepreneurs. Let's find ways to innovate, how we interact as well.
Some Nigerian tech individuals who have become success stories share some tips.
The first thing is, if you want to succeed, so if anybody is looking into going to fintech in Nigeria, understand the economics. Understand the economics very well, because if you don't understand it, you are not going to be successful. You probably just spend other people's money and park offshore, right? So the first thing is understand economics. right? I think the second thing is be humble to learn. If you're looking at going into fintech, you need a lot of connection with the banks. You need personal integrity. Years ago, we used to talk about Nigeria doesn't have credit rating system, but they do.
We are always keen on getting feedback from our customers, from our users. We are always very keen on getting feedbacks. Every quarter we do focus group discussions where we actually sit down with some previous users, to just interact with them and get their own insight as to what was your experience with our product, what changes would you like to see, and just really get their own sense around what we should be innovating in. Then next is, of course, always keep an eye out for your competitors, right? What are other people doing in the space? What are the stakeholders doing in the space? More recently now, there is the need to delve into AI.
Just beside the GS flag.
Tips shared, it's time for those who have been equipped to confidently practice and watch the result. Ini John Mekwa, Channels Television News.
All right, let's get a check on the UK now. We have Juliana with the details. Great to have you, Juliana. So we see UK house builder Vistry is to cut about 200 jobs and make £40 million less profit than previously thought. Tell us more about this.
Good afternoon, Laddie. That's absolutely right. Vistry are a pretty popular UK house builder. There was a merge between two companies a couple of years ago, but as we've seen with the housing sector over the past few months, it has been pretty tumultuous, and I think they're actually the first house builder to come out and say that they've been struggling due to high interest rates, high inflation, and the fact that we can see lots of prospective house buyers are putting off purchasing a new home because of high interest rates. For 14 consecutive months, the Bank of England raised interest rates to a record high of 5.25%. So some savvy buyers are putting it off. This is affecting the market, which is why we saw that trade update from Vistry to traders, to shareholders today, saying that they've taken a £40 million hit in its profits. What they say now is that they are going to be restructuring the business. Unfortunately, due to the restructuring, 200 jobs will go, but bosses believe that this will save them about £25 million over the next year or so. And what they do want to do is they want to transition from being purely a house builder for lucrative land owners. They now want to start focusing on the government's pledge to build more affordable homes. Of course, if you're building affordable homes, they get snapped up very quickly from social houses and from local councils that need to house millions or tens of thousands of homeless people who are looking for affordable properties. So yeah, that's the update from Vistry today, that they'll be cutting 200 jobs as a result of high interest costs and a very unpredictable housing market sector at the moment.
Yeah, business is definitely going through a lot right now, and a possibility of more job cuts here. We see Nestle is planning to shut down its Wyeth Nutrition infant formula facility and its co-located R&D center. Tell us more about this.
Yeah, that's absolutely right. Disappointing is what Unite have called it. Unite, the trade union that actually look after the staff that work at Nestle's site, which is partly in Northern Ireland and Ireland. They've announced that they'll be closing this factory, which has been creating baby formula for the best part of a decade. And they said that they're doing it just because of the demand in China is falling. Apparently, less baby formula is being purchased in China as the country deals with lower birth rates. Remember, a few years ago, the Chinese government put a 1 child per family rate for children, and it's worked. There are less and less of them, and it is affecting certain sectors. In fact, I'm sure over the next few years we'll be hearing more about how this is affecting particular markets. So Nestle have said that while they are going to be closing this particular factory, they do hope to open smaller sites in China and also, I believe, in Switzerland. 540 jobs are expected to go when the site does shut formally and officially in 2026. But Unite, the union that are looking after the staff, said that they are hoping to enter into negotiations with Nestle to try and save some of these jobs, because of course we are going through a difficult time at the moment. And again, just a couple of weeks to Christmas. I say a couple of weeks. Nobody wants to be hearing about losing their job at this time, Laddie.
Definitely. I guess the infant formula producers need more babies to stay in business. How are the markets looking in the UK?
Markets ain't great at intraday. In fact, they opened in the red, and at intraday they remain in the red. We spoke about Vistry, the housing sector. They have been listed on the FTSE 250, the domestic market, which is down. Their shares are down, and I believe the British pound is trading negatively against the US dollar at intraday.
All right. Thank you so much, Julian. It was great having your update. Thank you. All right, we'll take a break now. When we come back, more stories from the African continent. Do stay with us. This is Business Incorporated. Welcome back. Let's get a check on the soft commodity markets now. See, cocoa prices hit a fresh record high. The March London cocoa LCCC2 futures traded on the ICE exchange set a record high, about 3,205 pounds a ton earlier, and closed up 1.1% at 3,173 pounds for the December New York cocoa CC1, which rose about 0.2% to $3,648 a ton. Well, joining me now is Ted George, Chief Narrative Officer at Cleo's Advisory, joining me from UK. Great to see you again. It's been a while.
It is. It's good to be back.
So we're seeing prices now at all-time highs. What's driving this incredible price surge?
Yeah, well, it is extraordinary. I think arguably their prices are the highest they've ever been on record. If we go back to the 1920s when they first started trading cocoa internationally, they might be a little bit lower if you factor in inflation. Maybe they were a bit higher in the 20s or the 70s, but really they're at eye-wateringly high prices. And the thing is, it's a bit of an even balance here between worries about production of cocoa, but also strong demand. On the production side, we had a very poor season, which just finished for Ghana. They came in well below what was expected. We've seen a relatively slow start to this current season, which begins in October. And of course, we have El Nino hanging over the whole season. Is that going to affect output? So worries about the crop, that's pushed up prices. But on the other side as well, demand seems to be holding up. We're still seeing grinding is only slightly coming down across the world, which means that buyers continue to buy cocoa at this high price and consumers continue to buy more expensive chocolate. So all in all, it's a bit of a perfect storm, but this does often happen right at the beginning of a season. If some farmers have been holding back beans because they know prices are going to go up, we could see a surge in deliveries. So it's too early to say that we're into a disastrous season yet. We need to wait until we get into November to see the pace of deliveries.
Right, still a wait and see moment there. But what is the outlook for the cocoa season? We just started in West Africa, and will Ghana and Nigeria shake off, problems from last season?
Well, certainly that's where the concern is, because Côte d'Ivoire had a strong season last year. It's likely that it's had a good start to this season. Still a bit early to say. But of course, Ghana's crop was way down. They expected 850. They got about 650,000 tons. That's one of the weakest crops in almost a decade. And so there's a hope that Ghana will bounce back. But there is a financial crisis going on there, particularly for the cocoa companies. And that means not having enough money to buy the cocoa, but also for things like inputs, whether it's fertilizers or spraying against disease. Nigeria also had big problems with rains as well and flooding, which affected the crop. So I think that the real concern is with Ghana that if they can't get the crop back up, we're still going to have a shortage of beans. So I think there's a lot of uncertainty hanging over this season. That's why prices continue to be so high.
Right here in Nigeria, we need more dollar inflow, so we need to sell more cocoa at this great prices right now. But sustainability is becoming a major issue, in cocoa production. What impacts could the COP28 climate discussions have on the sector?
Well, absolutely. I think this is a really big moment coming up. COP28 is really, their meeting at the end of this month is really to say, hey, we have missed a whole series of goals and deadlines. What are we going to do? It's about remedial action. So when it comes to soft commodities, the focus isn't so much there on climate. It's about deforestation, stopping deforestation, and this commitment of 30 by 30. In other words, protecting 30% of the wilderness by 2030. And cocoa is one of the worst crops when it comes to deforestation. You particularly see it in the Ivory Coast, but all across West Africa. There's also going to be a real focus as well on this idea of land use for food, and maybe there'll be questions, difficult questions. Should it be cocoa grown there, or should it be food for the population so they don't have to import it at such a high price? And I also think this overall question of carbon footprint will come on. The European Union has introduced a carbon border adjustment mechanism, essentially a carbon tax, and they're talking about introducing it for chocolate. If so, that would mean cocoa. That could really affect the economic model. So I think there's a lot at stake in COP28, and I think all cocoa producers are going to be watching to see what kind of commitments or regulations come out of it.
Yeah, definitely be tracking that. Another concern, though, is a new EU regulation, banning imports linked to deforestation, forced labor. How serious could this be for African exporters of cocoa to Europe?
Well, exactly. I think this is another concern as well, which is sort of lies alongside to everything happening at COP28. This EU law, I mean, it's in the phase of being implemented. It's still not entirely clear how it will be applied, but they're saying effectively any commodity which is linked to deforestation or forced labor will be banned. Well, that is effectively the entire commodity supply chain in Africa, minerals, but also all soft commodities. So it raises tricky questions. If we talk about child labor, it's not that we're saying that children can't ever work on farms. I mean, they are the children of the farmer. They're going to work on their farm. The point is how they work. Are they not doing dangerous work? Are they regularly going to school? Are they being properly fed? Do they have health care? These are the questions that we need to answer around this question of forced labor. And then on the question of deforestation, so much of it is about monitoring. It's about having good data so you can see if there are areas where deforestation is occurring for cocoa, that you go in and stop it. Everyone understands that if you cultivate cocoa in an area which is unsustainable, you won't have a crop in the future anyway. So I think this is a really significant sense of regulation coming in from the EU, because West Africa exports the majority of its cocoa beans to the EU. So I think how it's going to be implemented, that is going to be where we see if there's a real bite to these regulations for African exporters.
Definitely be watching out for that, and as long as the kids are not forced, they can go to the farms. Thank you so much, Ted George, Chief Narrative Officer, Cleo's Advisory. Thank you so much for coming on.
Thanks, Larry.
Let's look at other stories. Now, see, President Bola Tinubu has promised honoring all contracts entered by the federal government, even those by his predecessors. The president is of the opinion that this is necessary, combating challenges with foreign exchange. He says this is part of the effort of his administration to strengthen the naira. The president was speaking in Abuja during the opening ceremony of the Nigerian Economic Summit. Take a listen.
Consistent with our commitment to enshrine fairness and the rule of law in our country, this government will uphold the sanctity of every legitimate contract. Specifically as it relates to foreign exchange obligations of the government, all the forward contracts that the government has entered into will be honored. I believe in the definition of our profession that I inherit the asset and liability of my predecessor. The framework has been put in place to ensure that these obligations are met in due course. My government is not blind to the challenges several of you are facing in the financial markets. I can only allay these concerns by revealing that we have a good line of sight for the additional foreign exchange liquidity that is required to restore market confidence. And we are going to do that.
Meanwhile, the exchange rate between Naira and the dollar opened the week low at 1,200 Naira to the dollar in the parallel market as traders continue to face demand pressures amidst dwindling supply. Meanwhile, the official window, the Naira closed last week up 1.45% at 784 Naira as is for cover. Analysts attribute the recent pressure on the Naira to activities of speculators and lack of forex inflows to the Nigerian economy as demand continues for the dollar continues. Meanwhile, same story right there in Kenya with the Kenyan shilling also hitting a new low on the same issues. Let's take it to Tanzania now, where officially Tanzania has entered agreement with DP World, a state-owned port operator based in Dubai, to manage a section of the Dar es Salaam port for 30 years. The deal has faced the opposition from Tanzanian opposition parties and human rights organizations in the past. But we see the Director of General State-owned Tanzania Port Authority says that currently it's confirmed that DP World will assume a lease and operational role for 4 out of the 12 berths at Tanzania's largest port. And trade among East African community partners has taken a dive since the implementation of a 35% tax on imports a year ago. According to the East Africa Business Council, the ban is yet to stimulate industrialization to generate adequate supply of products for trade in the regional customs union and common markets. The CIT report is a follow-up to another by the EABC report, Intra-EAC Trade, briefly showing analysis that details of the decline of intra-East Africa trade has continued this year due to the new tax on imports and exports. All right, those are the top stories on the African continent, and that's how your money performed at Intraday. Watching out for the closes today. Thank you for watching. Don't forget you watch this on our YouTube channel. Just flip over to YouTube, search Channels for Vision, and you can watch our videos. You can also visit www.channelstv.com. From me and the team right here at Lagos HQ, it's bye for now.